My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be my friends. I'm just trying to make a little money. My job, not just to explain, but to entertain, teach. Call me 1-800-743-CNBC. Tweet me at Jim Cramer. Okay, look, it keeps happening, and it's beginning to drive me even crazier than I already am. I'm talking about the endless attempts to explain why stocks do what they do in any given session without taking into account the caprice, if not the lunacy, of those who trade stocks for a living. Sure, the averages appear to tell a decent story. Dow inching up 125 points, S&P climbing 1.07%, NASDAQ pole vaulting 2.17%. Buy! But those percentages are the product of a furious battle between competing visions of reality, and only one vision can survive. Only one vision can hold up under close scrutiny before it starts all over again the next morning. Today, like many days, we got a somewhat crucial set of figures from the government. This time it was for the Consumer Price Index. Notice I said somewhat crucial, because we're now just days away from the Federal Open Market Committee meeting, where we're likely to get a rate cut. Any session between now and then could be an outlier that might alter the Fed's quarter-point mindset. When you're in Fed mode, as we are, you know that tensions are heightened, which is why it was good to see a basically inline CPI reading. Nothing important, nothing shocking, just a number we all expected, so we'll probably get the quarter-point rate cut that we're looking for. Now, the stock futures were drenched in red when I woke up at 4 a.m. this morning, overslept a half hour, my bad, perhaps with overnight traders betting that the CPI would come in real hot. Well, when the CPI came out in line at 8:30, the futures didn't bounce as you would have expected. What were they doing? Then the market opened down hideously again, despite the inline CPI number, leaving commentators baffled, confused. But next thing you know, various speakers and interviewees started ginning up reasons that can explain why the Dow Jones Industrial Average down more than 700 points in the first hour of trading, and the NASDAQ was off 1.5%. The pontificators, they were frantic. But after a few tries, they settled on a new narrative that we had to listen to for a couple hours. Many people were banking on a half-point rate cut, they said, and this 2.5% inflation number made it a double rate cut very unlikely. We're told that led to disappointment and then furious selling of stocks. Now, I was against, really, can I just say I was aghast at this wholesale license of the truth? I had just come from an interview with Doug Yearley on Squawk on the Street. He's the CEO of Toll Brothers, one of the higher-end home builders and a real smart guy, who told me that business had gotten very strong in August and in September and could only get stronger as rates fell. Doug is a straight shooter, not emotional, but he basically said, look out if rates go down from here. He was effusively, empirically positive on the coming rate cuts. He and I are both students of financial history, and these rate cuts, 25 basis points at a time, could ignite housing sales. That's huge for business of our country. Even though housing is only 10% of the economy, it's connected to so many other areas that I always like to say it punches above its weight. So I figured it was time to commit heresy. Jeff Marks, my partner with the CNBC Investing Club, we do a streaming program daily at 10:20 live. It's exclusive for members of the CNBC Investing Club, although we won't be doing one tomorrow because we have our monthly club conference call at noon, not too late to sign up. On today's program, I said I had to just throw it out there. I said, I can find no rationale for this decline. And because we were declining for no reason, I predicted that the average could actually finish up. Stuck my neck out. Didn't happen. I refuse to dignify the musings of commentators who clung to the fiction that bulls were disappointed by the CPI reading. I knew the early action was just nonsense. Further, I knew the sellers were wrong. What's wrong with honestly stating that the sellers are clueless and they don't understand the power of rate cuts? Why can't I do that? Where does it say we always have to be descriptive and can't be judgmental? I don't feel like making things up to ratify, if not justify, the action in a given day. Not when the action is so clearly wrong and nonsensical. Sure enough, the average is bottom. That 1.5% NASDAQ decline morphed into a 2% advance, for heaven's sake. What drove the turn? Well, look, there are a lot of things that happened. By the way, did you know that Amazon's back to where it was before the so-called bad news? Same with Broadcom. But the actually thing that really drove things, it was NVIDIA, which recently had become the epicenter of tech negativity. How negative? Okay, I don't make this stuff up. I actually heard a debate today about how long the bear market in NVIDIA shares would haunt us. The bear market. Somehow they didn't mention that this is still the best performing stock in the S&P 500 year to date, even as it was down about 30 points from its high. What happened to get this moribund stock roaring again? How about this? CEO Jensen Huang cleared up some questions that were lingering about the firm's supercomputer chip, Blackwell, which has been a source of speculation about botch execution, missed opportunities, and less reasonably, questions about the actual level of demand for AI hardware. In a market full of fabrications, NVIDIA is the subject of more than its fair share, so Jensen decided to set things right. First, in his fireside chat with Goldman Sachs CEO David Solomon as part of the firm's Communicopia Plus Tech Conference, the man I call Da Vinci, because he is a modern-day Renaissance man, said that we aren't telling the story right. NVIDIA sits not only at the epicenter of the generative AI artificial intelligence move, but also dominates the accelerated computing business, where almost all the old, slower chips will need to be replaced by NVIDIA's GPUs. Two themes. Then he said something that sent the stock flying. For days, the bears and know-nothing bashers of NVIDIA have been saying that the company's revolutionary Blackwell chip was proving to be too hard to manufacture and may not be able to ship in volume in 2024. Not true. Listen to what Jensen said.
Here we are ramping Blackwell, and it's in full production. We'll ship in Q4 and scale it, start scaling in Q4 and into next year. And the demand on it is so great, and everybody wants to be first. Yeah. And everybody wants to be most, and everybody wants to be, and so the intensity is really, really quite extraordinary.
Talk about reassuring words. And you know what? The alien semiconductor bull market really needed these words. Next thing you know, NVIDIA stock is flying, and so are the fellow travelers like Broadcom, which I just mentioned. That had reported a widely panned quarter and got trashed beyond all recognition. Do you know that today Broadcom traded above where it was sitting before the aforementioned quarter, which I told you was good anyway? The one that seemed to be hated but now seems to be transforming from an ugly duck into a beautiful but angry swan. Have you ever noticed swans are really angry? Look, we're in a highly emotional market. The actions in stocks like NVIDIA or Broadcom, or even JP Morgan, by the way, the visceral positive action in the alternative energy stocks, perhaps related to a stance on carbon emissions taken by Vice President Harris in the debate last night, makes it perilous to draw any conclusion to save one. Lots of companies that are doing okay will do much better when the Fed starts cutting rates. Everything. Yes, stocks just do better with rate cuts. Bottom line, I say keep it simple. Rate cuts are good. Small rate cuts are great because they project confidence and give you a lot more rate cuts later on, and they do not allow for panic. And those who were let down by the fact that we'll likely only get a single 25 basis point rate cut next week, I regretfully conclude that they have no idea what they're talking about. Hey, how about we go to Eric in Massachusetts? Eric.
Hey, Jim.
Eric, what's up?
Not much. Thanks for having me on, bud. Long time watcher.
Of course, man. Good to have you on the show.
Thanks. I wanted to ask you about JetBlue. I've had a position in JetBlue for the better part of the decade. It's been all over the place, obviously, as you know. With the news lately, guidance increasing, new CEO. Do you think it's going to turn around, or?
You know what? Here's my feeling on. I'm going to give you my wrap on the airlines. I haven't bought an airline stock other than for my father in 1984, and it was an immediate mistake, and I learned my lesson. Don't touch the airlines. There are a lot of better. There's many other stocks out there. You don't need to be in the airlines. Let's go to Ned in Ohio. Ned.
Hello, Professor Cramer.
Do I have tenure?
Chief Executive Officer of Comerica. How are you today, sir?
Good. I thought I was president. I like being a CEO much more than president. That's actually below the CEO. How can I help?
Well, sir, sometime back, early this year, I think I listened to your program, and you had the chairman of Nextracker on, and you talked a lot about that company and its sun-following sun tracker technology for solar energy and its software systems and so forth. At that time, it was around $60, $56. It's down to about $33 right now. So I'm wondering, is that a buy, sell, or hold?
I'm so glad you asked me about this. This is one I'm going to talk about tomorrow at our noon club meeting. It has been a disappointment. I think one of the reasons it's been disappointing, it was up very big today, is because a lot of people doomed solar, perhaps because President Trump was going to get reelected. And even though he says he's a fan of solar, he also says he's not a fan of solar, which is very hard to do both. But he's certainly be able to say that because it's the First Amendment allows you to do that. I will say that it's been that I've had to check in with Dan Sugar. Because I'm not happy with how the stock's done, and all he can tell me is things just continue to be good. So I think at 11 times earnings, it's the stock to buy in the solar group because it has real earnings. But I am sensitive to what you said. I thought I waited for it to come down enough to be able to buy, and I was. Tom in Massachusetts. Tom.
Hi, Jim. Thank you very much for taking my call.
The pleasure's mine. How can I help?
All right. I had a question on Celsius Holdings, symbol CELH.
Right.
Now,
I have to tell you, the Celsius has been a source of tremendous confusion. John Fieldly came on the show, the CEO, told a terrific story, and all it does is go down, down, down. But that doesn't necessarily mean that something isn't wrong. Something is difficult to figure out between the relationship with PepsiCo and Rockstar, and I think that may have a lot to do with the decline. But also, the sales have not been just that good, from what we can tell from talking to clubs and talking, of course, to Amazon. All right, the stock is not a buy because I don't know why it's going down, so I can't say buy it. All right, I say keep it simple, people. Cramerica, listen to me. Rate cuts are good. And small rate cuts, hey, a lot of ways are even better. On Mad Money tonight, we're 1 week away from the Fed's next rate decision, and I'm sharing what investors could expect ahead of a potential rate cut. Then, OG meme stock GameStop reported it was another unimpressive quarter, sending stocks lower. So can this stock, can we finally close the book on this darn thing? End the saga, so to speak? Game over. I'll give you my post-earnings take. And you called in on Timken, and I said I had to do a little more work. So I'm circling back with an updated thesis on the legacy industrial. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.